Hey everyone, and happy Tuesday! It's your girl, hashtag JLoan in the building. I hope you're having a fantastic start to your week. If I'm correct, I believe spring just started, even though it doesn't feel like it here where I'm living. But hopefully where you are, you see the flowers blooming, the sun is shining, and you're just having a great day, because we all have a great day when the sun shines, right? So I just wanted to come to you because I have your Mortgage Tip Tuesday today. But of course, as always, I want to again tell you that I am completely 100% thankful for your thoughts, your prayers, your texts, your phone calls, everything that you have done during this time of loss for my family. It is overwhelming, but so appreciated. So thank you so much. So on to our Mortgage Tip Tuesday, right? Another Tuesday, another tip, and there's only one who has been doing this consistently, and that's me. So today's day is National Credit Card Reduction Day. So I could re-record this video, but guess who's not gonna do it? Me, because I'm telling you, I do this in the raw. So this is National Credit Card Reduction Day. And because of the amount of credit reports that I pull and the amount of people that I help or cannot help, I thought this was a really good topic to talk about today. And I wanted to talk about the fact that maybe you don't know, but right now, as of 2023, per Statistics Online, there's over $900 billion in credit card debt. Okay, only 35% of people who use their credit cards actually pay off the balance in full, which means the other 65% carry a balance. Okay, Texas and Florida, which are the two states that I actually work in, are the 5th and 6th highest credit card amount holders in the U.S., where we're averaging somewhere between $7,000 and $9,000 of a carried balance on their credit card debts. And this is concerning, right? We got inflation, high interest rates, people losing their jobs, and which is, of course, a result of why we're seeing higher credit card debt. But what this debt does, can hurt you moving forward. And I want to talk about credit card debt for a second. Okay, so credit card, number one, can lower your credit scores. Okay, it's the quickest way for you to go from a 780 all the way down to a 700. I've seen scores drop 100 points for having credit card debt that exceeds 30% of the actual limit. So it's important to use them. I do agree you have to use them in order to build credit, but you must use them wisely if you can. I understand sometimes it's circumstantial and life throws things at us that sometimes we can't control, and a credit card becomes our safety net. So I am going to talk about that in a little bit. But for the time being, if you can keep your balances at 30% or below the limit, it does not really affect your credit score a lot. Okay, so you definitely want to make sure that you do that. Number two, it can lower the amount that you qualify for. So if you qualify for a home loan, it may lower, you may be looking for a higher purchase price, but we may come back and this debt will hurt you in the long run. Number three, it can cause lots of stress. You know why it causes lots of stress? Is because the balances just keep going, and you make payments and it does nothing. And so you feel overwhelmed with the amount of money that you're putting out compared to the amount of money that you're actually making. Number five, they have high interest rates. Okay, the average as of the fourth quarter in 2022 showed that credit card interest rates fluctuated between 19 and 20%. That is high. You want to talk about high interest rates? People are talking about mortgages having high interest rates. You should worry about these credit cards that have 19 and 20% interest rates, not to mention that these rates on these credit cards, they fluctuate. So they're not fixed. So they can fluctuate up and down, which will cause your balances, your payments, everything to go all over the place. and it doesn't give you any type of like financial peace or security of knowing every month what your debt is going to be, okay? Number 7, if you pay just your minimum payment, per research online, it can take you over 20 years or more to pay off your credit card debt. Now, that's stressful, right? If you're making the monthly payment, the minimum, the good part about it is you don't have any late payments. But the bad part about it is that debt can take you forever to pay off with higher interest rates. And then if you're continuously needing them, you're continuously using them, which means you're putting the balance right back on there. And it's just very cyclical. It's not going to help you. So I want to talk about a couple things. One of the things is, well, what do you do if you have all this debt and you own a home? How can we help you to reduce this credit card debt? Well, we can, right? And I know that you're going to say, but interest rates are higher than what I have on my current mortgage now. If you have the equity, the best thing you can take a look, just take a look, it's just a phone call, is to see, well, what if I do a cash out refinance? Okay? If you do a cash out refinance, what we can do is we can try and consolidate. How can we help? Okay. If I can spell today. Okay? If you do a cash out refinance, what we do is we consolidate that credit card debt. We use the equity in your property and we give you one fixed monthly payment. Okay? Now, yes, interest rates are higher than probably what you have currently. But I 100% can guarantee you that if you took your mortgage payment on a new mortgage and take all of the debt that you are paying on those credit cards, that your mortgage is going to be less expensive. And I know it because I do this every day and I've been doing this for years. It is just a phone call. It's just one phone call to say, hey, this is what I have. This is what I think my home is worth. Here's what my credit score is. Let us help you to relieve that stress with the equity that you've built in the property. Therefore, you know every month what you're paying on a monthly basis. And the key is just not to recharge all those cards, because no matter what, whether you're using all these services out there, these consolidation companies, if you're still keeping those cards open and you don't have the discipline, would be the best word, to not use them only if they are truly needed, you're going to end up in the same situation with high credit cards, and now you won't have the equity to refinance them. Okay, so the key is really learning how to do it. And then the question is, hey, Jeanette, well, what if I don't want to refinance? How do I do this, right? Well, if your job is still secure and you're still making money, the way I always advise, and this is just my advice, some people would advise for you to take the highest interest rate credit card, and you're going to pay double or triple what the minimum monthly payment is on a monthly basis. The rest of the cards, you're going to pay just the minimum payment because we're going to do one at a time, okay? In my line of business, if it's affecting their credit score and a borrower has multiple credit cards that have high interest rates, then I always will tell them I'd rather you pay off more than just pay off one. So I typically tell my borrowers to start with the lowest credit card as far as the lowest amount owed, because it's more pleasing when you have 6 credit cards and you pay off 5 than it is if you have 6 credit cards and you pay off 1, okay? Just the psyche of how we live our life, it just feels better to know that you've paid down or off a lot of debt, okay? So if I can help you, okay, I don't want to make this video super long, but if I can help you to take a look at your debt, see if you have the equity in your property, or just really just helping you just to control that debt and learn how to pay it down so that you can qualify for a home loan to purchase a home or refinance the one you have, please reach out to me, 817-601-5456. Until next Tuesday, it's your girl. I hope you have a fantastic, safe, and blessed rest of your week. Talk to you soon. Bye-bye.